In this teaching, I'm going to break down the Euro short golden bullet trade I took. Now, this was going to be a complicated week as per the DXY bias video that I published. So our bias was obvious, so we were bullish on the DXY, but the news was tricky. So we were going to have FOMC on Wednesday, the Bank of England's rate decision on Thursday, and then non-farm payroll on Friday. Now, we don't trade Mondays, as you know, because that creates the Judas swing of the week. But we had to really pick our spots, and the only real high probability spot we were going to get was on Tuesday. And the idea of this trade was to go short on EU and GU and looking for that short to be the high of the week. Because after Tuesday, we were likely to go into consolidation and seek and destroy pre-FOMC and the Bank of England rate and also non-farm payroll. So we had to be super careful. My trade on this particular occasion, I risked half as much as I normally do. So I normally risk about 0.5%. I only took a 0.25% risk on this trade. Now, this chart doesn't show you the GB levels or the OB or the fair value gap or the sweep. You know how I trade. You know the golden bullet setup. Try to work out where all the PD arrays are and how I took my entry. And at the end of this trade, I will reveal the GB levels and mark everything up for you. So this is a great way for you to train your eye. To recap the price action, since the midnight open, we just pumped violently all the way up. So we are looking for shorts, but we just had a monumental pump. So there was no opportunity in the London Open kill zone. And I didn't want to take anything during that dead hour after London Open kill zone. So I was eyeing the news at the New York Open at 8:30. So we had a setup around 7 o'clock, and it was a super clean setup. Now, normally, golden bullets TP very quickly. Within 1 or 2 candles, you TP. But once I got tapped into this trade, price did hang around quite a bit. And you'll see that it wanted to TP at equilibrium, but it needed to do it at a certain time. It was waiting for the move to happen at the New York Open, which was when the high impact news was going to be announced. This is a great trade because it teaches you firstly to be patient and not to move your stop loss. So I know it can be scary when you have high impact news coming and price isn't TPing you and it reverses all the way back and it goes back to our entry. But you just have to trust the go back levels. It's very, very tempting to move your stop loss to break even. And if I had done it in this case, I would have been stopped out of the trade. The way you have to think about it is if it's getting close to your TP and reverses, all it's doing is creating liquidity around that region. So that's greater confluence for you. That is creating liquidity where you want to get out. So that's a sign that you need to hold the trade. Now, obviously, there are some news events I don't trade around. So FOMC, CPI, NFP, things of that nature. But in this case, we were looking for shorts. We had a monumental pump. So we had all that liquidity. We had all the people who were long were in profit. So they needed to be taken out. And we are bearish. So everything was lining up for this trade. But given that, I still only risked half as much as I normally do because this week is low probability. And this will be my only trade this week. And when time and price came together and news hit at 8:30, price TP'd straight away. I now mark up the chart for you by adding the GB levels. So have a quick look and see if you can spot all the PD arrays that we need and all the elements of a perfect golden bullet setup. There's your perfect order block in the order block GB level. There's your fair value gap. A little bit bigger than we like, but that's fine. There's your M5 sweep. Now looking at the higher time frame, this is the DXY. Did you see how the reason why it retraced was to fill the H4 fair value gap. So that's what the protraction of the week typically does, is to address these imbalances. And switching back to EU to see what the higher time frame reason for that protraction was, on the H1 time frame, you see the Judas swing was to fill or partly fill an H1 fair value gap. So these are the extra ICT confluences. You have to think, why has price come here? And could this be the reason why price will reverse and give us a good, clean golden bullet setup? Here's the trade again, and you can find the chart in my playbook. If you have any questions about this setup, let's continue the conversation in the chat.